Welcome everybody to Crypto Rosetta. My name is Savage and today we're going to be looking at ICX. Before we jump into the price action, just want to say thanks for watching. If you're enjoying the content, please smash that like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description you'll find a link to the Discord. Come check it out, it's free to join. Okay, so what we're looking for here, I'm still looking at this in two ways, looking for that potential that we could have a fourth wave to the upside here where we just have a three-wave move up here and we look to actually reject again and look to push down one more time for a fifth wave to the downside. So this is still viable. We do also have the bullish scenario here. That fifth wave potentially could look to actually take us towards this 10-cent range here to this 5-cent range. So, well, 6 cent, let's say. Basically, we need to be aware that there is still the potential for this possibility to break down here. I was looking at this move as an A, B, and potentially a C to the upside. So that 1-to-1 has been met. We've actually come up and hit this 236. We almost came up to the 1382, which would be this 50-cent region. And we came up to this 48.83. So what I'm looking for here is the count would suggest that we have an additional leg to the upside still. The problem is we've actually come down quite deep here. So need to just be a little bit cautious of this. So we have this as a 1, 2, 3, 4, and then looking for this fifth wave to the upside. So this is still viable. At the moment, it does seem that we just have three-wave structure to the downside. We need to be careful, though. This could look to extend out. At the moment, though, just looking at this, it looks like a plain three-wave move to the downside. 1-to-1 would actually be looking for this lower range of this 29 cent. So we have to see how this one plays out. Potentially, we do have a little bit more down to come down here. So I just want to talk about this in isolation for a second. Basically, there's two ways that I'm looking at this possible move to the upside, and that is that basically we have this as a 1, 2, 3, 4, and then we're looking for a fifth wave to the upside here. However, if we do break down deeper and we actually lose this 30-cent range, it does start to become less likely that we're in the fifth wave to the upside. Invalidation only really comes by crossing 24 cent, though. It is possible because this was quite shallow, and sideways potentially we could have a deeper fourth wave here. So I'm going to be keeping an eye on this 1-to-1 area. I wouldn't really want to lose this previous structure that we've got here. You can see that we've also got, towards the lower end of this move, we do have some support coming in here towards this 1-2-3-6 at this 26 cent 57. The problem is if we do retrace down this deep, it would be very unlikely that it's a fourth wave, just because of the depth. I would prefer it to like turn around here at this 50% and look to move away, but we'll have to see. If we do move away from here, basically some target areas would be this 0.382 at this 45.14. So this would be of the wave 1 to 3. And then the higher range here would be this 5747, looking at this higher area here, which is a typical fifth wave move. So, potentially we could see a move up into these zones, but we'd have to just be cautious of this because this retracement is quite deep. So if we had a shorter wave 5 here, 1-to-1 would only bring us back to this 41.73. 1.618 would just bring us past this high here. So we'd have to just be careful of truncation here if this is the case. If we get a smaller 5-wave structure to the upside here, something like this, 1, 2, 3, 4, 5, and then we actually move up to this high, maybe even set a double top here, or just actually come to this 45.14. That could be enough to be 1, 2, 3, 4, 5. And then what we'd be looking for is basically looking for that retracement back down into, this lower support zone here. It's 29.32 to this 21.87. If we do drop back down here directly, and we don't actually form this higher structure, what we could end up getting here is basically just a bigger move where either this becomes an A, get a B, we get a C, something like this, come back down into these zones. And then we could actually start to look at the possibility that we could have something like this rather, where this becomes 1, 2, another 1, 2 here, and then we look for a much bigger move to the upside, which would be towards this 114 if we came down to this 618, which is here at this 2665, which also ties in with that 1.236 retracement here. So keep an eye on this area. If we do come down this low, that could be quite an interesting zone. Um, like I said, though, we'd have to hold these lows. Basically, with this, we would have to maintain this low of this 1949 and then this lower range of the 1758. Once we start to lose 2260, this move starts to be stressed a little bit. So we have to really, I wouldn't like it to come down that deep. I'd like to see a turnaround higher up here towards this 2665 to this 2582 if we are looking for this, this continuation to the upside here. The problem is, like I said, potentially we could just have a three-wave move here and then we look to reject. So we need to just be aware of that bearish scenario here. At the moment, what I'm looking for here is it does look like there is that potential to continue a little bit more here. And if I just turn this other scenario off here, basically we can see that we have the potential to count this 1 2 1 2 3 4, and then it does look like we have some additional fifth waves to the downside. So I am anticipating a little bit more of a move down towards this 2903 to this 2786. In the immediate short term here, what I'd be looking for is a move down to this 30 cent to this 2933 range. And then I'd want to see if we get another three-wave move to the upside. If we do and we fail to break above this zone here of this 3425, potentially this could mean we have an additional leg to the downside here in a fifth wave to this 2903 to this 2786. So this could potentially bring us up to this 1-to-1 line, which is at this 29 cent range, which is over here. So basically what this would mean is that the first part of this move here would be equal in distance to the second part of this move. So this could just be a three-wave move completed, and then we look to push to the upside. What we need to be careful of is just the same in the opposite direction, where we could have a 1-2-1-2. This also could be setting up for a deeper drop here, where basically we set this as a wave one, come back up, fail to break back above this high point here of this 42 cent, and then actually look to continue to sell off here, where this becomes 1-2, 1-2, and then we look to break down deeper. The alternative here is that we start to extend out and push down through these key levels and basically move down to this 2311 area directly. If we had a direct sell-off into this zone, so potentially something like this, we start to form some additional structure down here, where we actually look to extend within this third wave potentially. What we would then have to be on the lookout for is that possibility of a bigger, 1, 2, 3, looking for a fourth, and then looking for that potential for a fifth wave to the downside. If it has to play out exactly like I have it on the chart here, that could potentially mean we move down towards this 20 cent range to this 2183, which would be bringing us back into these sort of lower levels here. So need to keep an eye on this. If we do get a five-wave move like this to the downside, what we would have to do is watch the retracements. Any kind of three-wave structure to the upside could actually indicate that we would see continuation to the downside after that point, where we see something like this and we get a bit of a sell-off again, where this becomes either A, B, C, or potentially even a 1, 2, and then we get a bigger sell-off for that wave 3. So these are the things that we just need to be a little bit cautious of. To the downside here, there is still potential for this to become a more substantial move. If, however, we just form this primary five-wave move down here towards this 30 cent or towards this 29 cent range, basically what we could do is then turn around. So if we do just come straight down here like this into this zone, turn around, come back up here, and you start to move away from these lows. Um, Basically, what we need to be looking out for is then this rejection area, this 3867 to this 3463. If we do move up into this zone in a three-wave structure, we need to be careful of that push to the downside. But if we do move up and start taking these highs here, this 4204, and then finally this high here of this 4884, potentially we could be looking for some of those bullish targets to the upside. So we're going to have to just see how this plays out. We are holding that support at the moment, but we need to see the follow through now. So like I said, if we are in a fourth wave here, basically what I want to see is completion of this move A, B, and C, coming down potentially to that 29 cent range, and then looking for that reversal to the upside and getting it back above these key areas. Obviously, we talked about those targets we need to be careful of. Potentially these could be some fifth wave targets. Failing to hold this 50% zone, the next area I'd be looking for would then be potentially down here towards this area of this 2932 to this 2187, and then looking for that potential to find support in here again. If we are looking at that 1-2, that support range would be would be a little bit higher up here. It's 29.92 to this 22.60 range. So this 618 is quite an interesting zone. Like I said, potentially come back into these highs. So keep an eye on that if we do look to break down deeper here. Potentially that could be looking to set us up for 1-2-1-2, but then we would only get confirmation by a bigger move up towards this 114 area. So need to be careful of this. For as long as we only have a three-wave structure in here, we need to just be aware of the fact that we could even just see this move rather become, instead of looking at it as a ABC where we're looking for 1, 2, 3, 4, 5, this move could literally just complete here as A, B, and C, and then we just don't form a fifth wave here, and we just look to break down again and potentially start looking for that deeper retracement down towards this 10 cent range to this 5 cent 93. So this is the danger of these coins. They can move up quickly, but they can also just move down just as quickly. So keep an eye on this area. If we do push up again, basically I'd want to be seeing whether we move past this 60 cent 71. If we do move past that 60 cent 71, what we could then have is a bigger five-wave structure here where we're actually still within this wave 3. So 60 cent, let me just double check this because it is different to the other target area. So let me just double check this one. There we go. Come on. Apologies. I don't know why they're different, but let's just get this right. And onto this low here. So that's 61.19. So that would be the 1618. So if we do get a push up to the 61 cent 19 range, basically then we'd be looking for continuation here. So this would all be within this other structure would all be within here. 1, 2, 3, 4, potentially a fifth wave up, something like this, into this area, and then looking for that continuation. Alternatively, like I said, potentially 1-2-1-2, and then this third wave would be substantially higher than this 1618 area, because obviously we'd have to allow for that extension within that third wave, which would push this target area higher. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button, hit that subscribe button if you haven't already. Turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description, you'll find a link to Discord. Come check it out. It's free to join. As well as that, there are affiliate links for PrimeXBT and BYBIT down there. Both great exchanges we use on a regular basis. If you don't have an account, using the affiliate link does help support the channel, and we do appreciate it. Everyone, have a great day. See you in the next one. Take care.